What did you make of the comments out of the ECB overnight? We've got the euro sitting at a 7-week low. A lot of people suggesting that the comments were perhaps more dovish than they had anticipated, and the market perhaps a little bit wrong-footed by some of Christine Lagarde's comments on the outlook for the eurozone.
Right. Well, the good news is we are seeing some green shoots in the economic data coming out of the eurozone right now. So the strategic review will be very much in focus, but really the monetary tools in Europe look fairly overextended. I think going forward, she might, implement a symmetric sort of framework in the inflation target, but her main goal will be to rally for more fiscal stimulus to come from the European governments going forward.
Which remains to be seen whether or not they'll play ball with her. You're overweight European equities. Explain that rationale.
Right. So we believe that European equities are relatively undervalued right now versus other regional peers, and they have been overly discounted for fears relating to Brexit and also the Italian fiscal situation. Now, one thing that we like is that the economic data, manufacturing PMI, for instance, are rebounding quite steadily from their lows in the fourth quarter of last year, and this usually bodes good performance from European equities going forward.
What about the US markets? Because we are, of course, in the middle of earnings season. The numbers have seemingly been quite good. Again, a lot of people suggesting that we could, of course, see this earnings recession, of course, gather momentum, but that hasn't necessarily been the case. What do you make of the corporate sector in the United States right now?
Yeah, right. So the earnings recession story hasn't really panned out. I think fourth quarter's expectations are quite achievable. I'm not too worried about the upcoming earnings season. Now, what will come more into focus are earnings expectations for 2020. The S&P, I think consensus is about a 9% growth year on year right now. That still looks a bit rich to me. I'm looking for somewhere in the mid-single digits. There could be scope for expectations to lower as we enter into 2020. Deeper into 2020, we tend to see that. But overall, with PE levels at such elevated levels, I think earnings growth is key to driving the market forward. And if this falters, this will be a source of risk for the market going forward.
Okay, how negative would a trade dispute between the United States and Europe then be for the markets?
Well, I think we need to take a strategic view to this. While, trying to advocate for better trade terms for the U.S. is a very popular item on Trump's agenda, he will be cognizant of the fact that he is up for re-election this year, and he will be careful not to have this issue derail the U.S. economy in a big way.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.